Hey, everybody, we made it to November. And the question is, what happens next? Are there any positive signs after a historically bad October? And we'll break it all down today. We'll also talk about some of the cracks in the system, some of the leaks, some of the things that are getting very broken. I touched a few times on liquidity drying up as well, and we're going to point to some of that as well. And that all impacts the markets. Remember, liquidity is the booze. No booze, no fun. No fun, no fun. So let's get into the story and hope everybody's well. And yeah, it's Saturday. And disclaimer, never financial advice. And a little bit of good news. Can't make these numbers up. November is up 0.69% so far. Anglo Blackson, thank you for coming. Has a weird number, 0.69% after we were down for the month of October, 3.93%, which is not that catastrophic, my friends. 3.93%, just under 4%. Not exactly a Rectober. Not exactly an Uptober either. And people hate those terms, but they're old Bitcoiner terms from way back when. The question is what will happen in November. And by the way, November is historically the best month of the year for Tesla, the best month of the year for Bitcoin and crypto. We'll see what happens. No guarantees. Thank you, TBF is off. Coming. Now, a couple of things. The historic moment, Bitcoin down just under 4% in October. And we had the largest crypto liquidation in history by a factor of 10. And Bitcoin's still up nearly 20% for the year, despite all of this happening. But we broke the longest winning streak with the first monthly loss since 2018, which is a bit sad. But it's okay. It's only 3.8%, which is nothing. Bitcoin can fall that and more in a day. Let's look at what happened over the last 7 days. Bitcoin still flat. I was going to share a chart actually of showing it a year ago to today. Nothing has pretty much happened. It's bizarro land. It's like medical flatline. For all the medical people out there, they'll get that one. What else? Everything is kind of flat. Solana, flat. XRP, pretty much flat. ETH down 1.43%. Binance down 1.7%. Red, Cardano down hard. Sui down hard. Avalanche up. Zcash up again. Dark green. Tau up again. AI play. So that's kind of where we are with crypto. Now, we talk a lot about rate cuts because that does provide some fuel. And there's a lot of chit chatter that after the second rate cut for the Fed in 2024, Bitcoin went bonkers. You haven't heard that word in a while. Bonkers, up to the right. Now, we just had our second rate cut and it hasn't responded yet. Sometimes it takes the markets time to digest. I always talk about the 3-day rule. You know, there could be like an earnings report, which actually is good, but the market perceives it as bad. It takes them 3 days to figure things out and digest the news. Maybe it takes some time for the markets to figure out the rate cut news. But second rate cut is important. But the markets did tank because of things Jerome Powell said. He said, maybe there may be no more rate cuts this year. And that was sad because everybody had priced in a third rate cut this year in December. And that shook markets. We had our second 25 basis point cut, taking us down to 3.75 to 4%. He also said we'd be ending quantitative tightening, which means fire up those money printers. And nobody was happy because he said, we may not cut in December. However, when I look at the odds, there's a 63% chance of a cut for December, which is not bad. Not bad at all, my friends. Anyway, let's look at some other parallels of charts. This is a cool chart from Mercury Finance, I think it is. Down the bottom right corner. Cool little logo. But it's a beautiful chart that tells a very simple picture. When Bitcoin goes up, gold goes down. When gold goes up, Bitcoin goes down. When gold goes down, Bitcoin goes up. When gold goes up, especially on a rampage, Bitcoin goes down. Now, gold is teetering on the brink. It is technically down. What happens next? If history repeats, Bitcoin should go up. I mean, everything is pointing to Bitcoin going up, but it's not going up because people are selling. Let's look at this other beautiful little chart from River. And this is from a guy called Shinaka. And his post accurately reflects the data on Bitcoin's 177 Bitcoin a day being pulled in. So if you look at individuals, the net outflows, so far this year, the dynamics in 2025, they have sold 3,200 Bitcoin a day. Bitcoin left behind, 450 Bitcoin a day. But the treasury companies are sucking in 1,400 Bitcoin a day. Businesses, 356 Bitcoin a day. And I know small business owners that stack Bitcoin. Plumbers, electricians, all those good, hardworking people are all stacking Bitcoin. Funds and ETFs, 1,430 Bitcoin a day. Other 411, don't know what other, and governments, 39 Bitcoin a day. So and lost Bitcoin, we're still losing 14 Bitcoin a day. And that is where we are. But the key to this chart really is the fact that with all of this selling, which is very high, and more has been sold by long-term holders than the history of Bitcoin this cycle around, it's all being absorbed, which means despite that heavy floor, Shanaka says we have a $100,000 floor for Bitcoin, which is what he calls the new thermodynamic floor. So I hope he's right. That would be nice. Imagine Bitcoin floor price forever being 100 grand. That would be incredible. Now, other news. Let's look at fear and greed, another thing pointing in the right direction. And trust me, I try find the ugly news as well, and I do have some ugly news, so wait for that. But fear and greed under 30. Every single time this bull run, fear and greed has gone below 30. And when it stops and it turns around, Bitcoin price goes up. It marks the bottom. Will history repeat? I don't know. We'll see. Another interesting piece of news as well is privacy wins the month again. Again. Zcash, Zcash, Zcash. Everybody's pumping Zcash. I don't own any Zcash. I don't do privacy, which probably should have. But you can see up 73% for the month, while every other narrative has gone down. Number 3, though, is Bitcoin, down only 8.6% for the month. AI down only 10.9% for the month, etc. So the privacy wins the month again, aka Zcash. But Martoon had a very interesting observation. Every time privacy Zcash pumps, Bitcoin dumps. Martoon said, again, it's always a brutal time for Bitcoin. But the good news is, everybody, the good news is Zcash has pumped too much. So it has to mean revert at this stage. And it looks like maybe people that own Bitcoin are selling the Bitcoin to buy Zcash. That could be the idea here, but we'll see. But after the rampage it's been on, it can only go so high. We shall see. Either way, let's look at some money flows as well for the week. Bitcoin ETFs did drop $607 million this week, but it's okay because over $3 billion has flowed in for the month of October. October is now over, but it was a very positive month for ETFs. Again, we're getting that perpetual bid all the time for these ETFs, which is fantastic. Let's check in on ETH. ETH pulls in 114 million for the week. Not bad. The previous 2 weeks before that were red, and then 2 weeks of positive, and then a week of red, 2 weeks of positive, week of red. So the ETH is like stopping and starting, but overall very, very good. Still pulling in money too. And then we had BSOL launch. This is the Bitwise Solana ETF. We already have Rex ETF, which has about 450 million in it. The BSOL, in just the first week of operation, outpaced the Bitcoin ETF and the Ethereum ETF. And this is a historic debut for this one too. The volume was nuts. They pulled in 70 million on day one. And now this has over $500 million in assets. And it's positive every single day. So it looks like maybe there is rotation happening. Maybe there is a rising dominance of Solana. Maybe people are actually doing the math. And I know people say, oh, he's shilling Solana. No, I talk about winning assets. That's kind of what I do here. I don't talk about losing assets. And I look at data, and data makes my decisions. This is the most undervalued crypto out there. But the markets are very irrational, so don't bank on that. Or me, just read the data and make your own interpretation. Now, one of the cracks in the systems, this happened overnight while you were sleeping. The Fed secretly threw 30 billion into the repo markets. That's also the highest amount pumped into the repo markets since 2020. Okay, we know what happened in 2020. The Fed injected 30 billion into the banking system, the highest in over 5 years. And this means there is liquidity stress in the system that I spoke about on Patreon earlier in the week. And this is also technically not bullish for markets. It could be a warning sign because when liquidity dries up, the whole system could be breaking. And remember, it's like booze at a party. No mun, no fun, no liquidity, no fun, no volatility, no moving, no action. This just had to be emergency pumped into the market. What happens next? I don't know, but it's part of the whole QE stuff that's coming as well. The system is going to crack. And Jerome Powell said he's ending quantitative tightening December 1st. But technically he's cheating because he's kind of quasi de facto stealthily ending it last night. So while you were down the pub, he was pumping 30 billion into the repo. And I hope you got your piece as well. Now, other things that are happening in the market is kind of bizarre. Stablecoins are now doing 2.3% of global payments. That's monstrous. $46 trillion. Stablecoins are it. And remember as well, the more money in stablecoins, the more it floats all crypto boats. So we love this. Will stablecoins get to like tens of trillions in the future? Probably yes. So be ready for that too. And another kind of payment news too. Coinbase came up with a new protocol called X402. And there's some mild discussion out there that it could be a threat to XRP holders. Because basically this X402, it's probably no secret they called it X on purpose, X402, is the combination of maybe some of what XRP Ripple does, but with AI. And it could, as according to some people, screw XRP over by capturing AI payment flows before XRP and Ripple ever adapt. We shall see. This will be interesting. And it's already kicked off with a bang. And watch this space carefully. Again, payments are a huge part of this whole space as we go forward. Let's talk about stocks real quick. This is stocks over the last days. I talk 7 days, 30 days, 90 days. This is over the last 90 days. Some big moves. NVIDIA up 16%, Apple 28%, Google a whopping 48.76%, Broadcom 28%, Oracle 5%, Meta down 15%, Microsoft down 3% over the last 90 days, Amazon up 12%, and again, the winner over the last 90 days is Tesla, up 49.1%. Coincidentally, it has had a great time, but there's a lot of stuff on the cusp of happening. And Elon was all over the radio waves yesterday, 2 podcasts, did nearly a 3-hour session with Joe Rogan, and he was on the All In Pod. And every time you listen to this guy, he always drops a whole bunch of nuggets and breadcrumbs, and you always learn something. So it's worth listening to the guy. Again, he's all about absolute truth and everything else. But he did drop some very interesting robotaxi breadcrumbs. Basically, the usual 8 to 10 cities. Austin will have 500 cars by year end. Bay Area, 1,000 cars. That's 1,500. Plus another, say, 8 to 10 cities. You can do the math. Each car will make at least $800 after a week of expense. In fact, a buddy of mine just took a car from San Jose Airport up to Marin, 1 ride, 1 hour, and the fee was $100. So how many of those you need to make in an autonomous vehicle that costs very little to make and makes a ton of money? So even sandbagging $800 a week, I mean, this car made $100 in an hour. But of course, you got to take into account expenses. Anyway, fleet management, all that's a pain. But even just assuming my sandbagged $800 a week per car, we've got about 6,000 cars sometime yet next year. That's $250 million of net profit. Multiply that by a high growth PE ratio of 100 to 200. You have significant impact on the stock price. And we're going to 1 million robotaxis in the next 5 years. It's very big. Check out my price predictions. Robotaxi only on Patreon as well. Now, people are worried about the payment comp package being rejected. Well, if you go to Kalshi, it fluctuates between 92 and 98. Polymarket, 83 to 89. Analysts like Wedbush and Zacks, 85 to 95% sure it's going to happen. And Kathy Wood and Dan Ives, 90 to 99% sure it's going to happen. Again, I don't count my chickens until they're hatched, so I always remain paranoid and nervous it's not going to happen. But if it does happen, it's basically a roadmap to a 10x in the stock price. Anybody that votes against this doesn't want the stock to perform, which means they probably don't want to hold the stock after this vote, or they just hate Elon and think he's a threat. Now, something bizarre happened as well this week. there was a meeting of what I call the Three Kings. And again, of course, this is the week that NVIDIA surged above $5 trillion market cap. First company ever to hit 4 trillion 70 days ago, and they hit 5 trillion this week. Mad. But what's really interesting is these are the Three Kings. These are the CEOs. We've got the guy on the right is NVIDIA CEO, Jensen Huang. I don't remember. The guy on the left is Samsung CEO, and the guy on the back is Hyundai CEO. I can't remember the name. Sorry about that. But they all met in Korea. Now, there is rumor that Hyundai have purchased 50,000 Blackwell chips. Guess why they did that? Why would a car company buy 50,000 GPUs? We know it's to basically create autonomy. Hyundai are definitely going down the autonomous path, which we thought. I also believe Hyundai will be the first company to license the technology from Tesla. I wonder if that OEM deal will be announced on November 6th at the shareholder meeting. Either way, this is uncanny. These huge companies all having a beer together. And it's nice to see them in this little kind of like a hole-in-the-wall restaurant. It doesn't have to be a fancy place, so I respect these guys. Really cool. Other little bit of bad news. Starbucks are closing 400 stores. A lot of people think it's because of a boycott. I just think it's because the economy is weak. Starbucks is expensive, and a lot of people don't have disposable cash. Some pro-boycott advocates argue this is their way of doing it. Anyway, I think the sales are pretty clearly down. Maybe there's a little bit of boycott. Maybe it's just weak economy. I don't know. I always look at that as a signal. Whenever Starbucks does badly, the economy is bad. It's like whenever Walmart does good, the economy is bad. It's weird because people go there to save money. They don't go here to save money. They go here to blow money. And shout out to James Lavish, friend of the channel. He wrote this spicy take. We have Christine Lagarde, who promised us a Euro CBDC in October 2025. Well, that failed due to technical issues. So shout out to our friends in Europe. Thank God it's not here. But now she's saying 2029. And the world will be a very different place in 2029. In fact, I do believe there may not even be a Europe or a Euro in 2029. It might all be run by Bitcoin. Who knows? But from James, he says, translated, you will soon need approval for every single transaction you attempt. If we decide we don't want you to buy that stake that may cause flatulence and gas and destroy the environment, which apparently has been debunked as well, or take that trip or fill the car with gas, all in the name of climate control, of course, then we will simply deny the transaction. And if you speak out against us, we may seize your money altogether. This is what they have planned. This is the danger of CBDC. You hand over the keys, they own you, they control you. So be very, very paranoid. This is probably, for people who are paranoid, all their lives they've been paranoid. They never needed to be that paranoid until now. Now is the time where people really need to be very afraid, very worried. And speaking of Europe, a whole bunch of statistics out this week about taxes, and GDP, and growth rates and everything else. But this one caught my eye this morning, on top of the other ones I shared earlier in the week. USA versus Europe. Taxes as a percentage of GDP. A couple of things you pry from this. One, you can see the economy in Europe is 17.9 trillion. That in the US is 27.4 trillion. So the US is 50% larger economy. It's pretty substantial. Second thing, tax revenue as a percentage of GDP, and this is 2023, it's old data, it's even higher now, is 40.6% of GDP. And in the US, it's 16.1%. There's a lot of stuff going around the internet earlier today, but I do believe the more you tax an economy, the more you choke it off, the more you remove the incentive for capitalism. Capitalism drives innovation, which drives business, which drives profits, etc., etc. The more you choke off that reward, that incentive, the more you destroy the economy. So if you're shouting Christine and friends over there in Europe, cut your taxes, help grow faster. And finally, this is meme du jour, and I know people are very upset waiting for alt season. This is a crypto bro waiting for alt season. He's been sitting on the flooded plain for many months now. In fact, it's been over a year. The question is, will it happen? I don't know. Do things look good? Yes. Are things different this time? Hell yeah, they've been different for a year and a half. And that's all she wrote. I hope you enjoy the story. See you all tomorrow for... Actually, there's a couple of questions in here. Might be interesting. From Mr. Monkey. It's the new socialism. They don't seize control of the means of production. They just seize its profits. Very good point. Very good point as well. Thank you as well, Shoni, for coming. And T&D Tesla, if you're out there. And of course, Matt P, Anglo Blackson, and Joe, DBF 430, Adam Q, and Clint the Thirsty Sponge. Appreciate you all. See you tomorrow for the Q&A. I now go to work on that. Have a great weekend, my friends. Take care. Bye.